morning, traders. Welcome to the TMT stock market strategy video for Wednesday, November 25th. Just want to say before we start the video, happy Thanksgiving to everyone. I can't believe the holidays are officially here, but nonetheless, we are still trading. Today is a full day. Just wanted to let you guys know Friday is a half a day. Market close at 1 o'clock p.m. And then we get into the fun stuff for the next 3 weeks, which I think that we're going to have some nice volatility. Today's a very important video, and it's more, we're going to go over the indexes. We're going to see where we are and where we think we're going to be headed between the next day and a half of trading. But I want to point out a little bit more of a longer-term trade that I've been watching, and it's really starting to brew, and I think that you guys can really capitalize on this trade, and that's the gold trade. Actually, it's commodities in general. But let's talk about really right now. Yesterday, we did nothing yesterday. We had probably 4 days of doing absolutely nothing, just basing, creating dojis, and I'll show that to you on the index charts. Other than last week, we had that Monday big push, Wednesday big push. We had two in between days that we didn't do much of anything, and now we're just kind of stuck here. Markets can't get out of its own way. We are up a little bit in the pre-market, but that's yet to be seen if the market's going to follow through with any gains. I do suspect today I will be a buyer of dips, looking to buy any weakness into support. Remember, into support. I'm not looking to do anything. If we're just rolling over and we keep selling off, I want the market to base and get into some sort of support area, whether it be a moving averages, a Fibonacci cluster, whatever the case may be, okay? Now, that's my analogy for today and going into Friday. Usually kicks off a really good time of the year where we start kicking off the Santa Claus rally. Remember, we've been talking about that we did have the Santa Claus rally. It looks like it may have happened already in October and early November. Okay, does that mean that we can't push higher? No, of course not. We're going to wait and see which direction the market's going to break out. More importantly, we are watching. What are we watching, guys? And you know what I'm talking about. Transportation and the Russell 2000. If they break higher out of the ascending triangles, then I'm going to buy the market, okay? And I'm going to say that I'm going to really confirm that the Santa Claus rally second leg is underway. If we start to break down, then I'm going to absolutely not buy stocks. I'm going to be looking to sell rallies. But again, that has not happened yet. Let's get into next week, and then we'll do an analogy there. Now, most importantly, really, really good stuff. As we all know, the commodity sector has been really getting destroyed for years. Let's even say the last couple of years. You know, gold is at 1070 and selling off again this morning in the overnight. There's no fear at all in the markets. But we do have the dollar breaking to new highs, right? The dollar index, the DX, is trading at 100 now, par. That, to me, tells me that the dollar goes further. What happens to commodity prices? Commodity prices goes lower, okay? Now, here's the caveat here. The Fed's going to be raising rates, or it looks like it's going to be in December, right? We don't know for sure what happens, but if the Fed does raise rates, right, and we get rising inflation, what you see here is a 5-year inflation rate from this chart, okay? Here's a head and shoulders pattern. You can see that clearly. So we do have a tick up in inflation. If inflation starts to rise, we are going to have a big move in commodity prices because it's good for commodities, all right? And which the commodity prices are so oversold, they're due for a bounce anyway. So even if you get and you can catch this bounce, I think you'd make a lot of money in the commodity sector. Pick one across the board, whether it be grains, precious metals, crude oil. Me personally, I'm going for looking for the gold trade. And I want to show you two indexes. Here's the CRB, which is a commodities-based index mixed with a bunch of commodities, grains, oil, gold, what have you. You could see that we are now at its low here. Okay, I wouldn't even call it a double bottom. Well, you can. We did break below, back up above it now. Now look at the momentum indicators, the MACDs. You see the histogram starting to move up higher. We're starting to get a curl up in our MACD itself. Now look at the RSI, bounced off for 30. Okay, so now we're starting to roll over, which we did from these oversold levels, and now we're starting to break higher. So this is something that I'm watching. Needs a little bit more work. I'm not saying to do it today. I think when you have the commodity prices and when you have the dollar moving higher, I think you're going to be able to buy commodity prices even lower, a little bit lower. Why? Well, right now we have a flight to safety in the dollar, right, from around the world. Okay, now here's the other thing. If the market does sell off at one point in time in the next 8 to 12 weeks, you will get money coming into gold, because gold was the safe haven trade, right? You have fear in the markets, you buy gold. Well, now it hasn't been that way for the last several years because the Fed has been inflating the market prematurely by just buying debt, buying our bonds, and putting money into the market when the market shouldn't be at these levels. But I do like this trade because it's going to act as both. One, you're going to get a short covering trade in gold and commodities if rising inflation starts to continue. Number two, you're going to get that safety haven trade. That money will go into gold at one point when it just gets ridiculously oversold like it's been now. Okay? Let's take a look at the DBA. Same index, just different base commodities. Same thing. Now we have a nice hook up in the MACD here. We have histograms above 0, and now we have RSI at 50, which is now telling me we have some sort of a strength, right? You have lower lows and lower highs have been diminished, right? So we have bearish symmetry gone. Now we're looking at higher highs and higher lows. And now this here is starting to base, okay? So this is what I'm saying to you guys. Keep an eye on commodities in the next few weeks, okay? Between the next 4 to 8 weeks. And if you have a longer-term horizon where you can average in and pick little spots and average into weakness, that will be the best thing to do when you trade, when you're doing this trade. Now, let's get into the charts. UUP, which is a dollar ETF, right? It's a tracking ETF to the dollar itself. Now we have here, we're at 25 and change. The DX is at 100. If we take this out, guys, right, we start taking this out and we really start to move higher and take this out, we're going to get a nice big flush in commodity prices. That's when I'm looking to buy gold and the commodities in general. We get a big spike up in commodities. I think gold will flush once and then start to rally because we're going to get that fear trade that come in, okay? So keep an eye on that. Take a look at the GLD. You can see it's gotten decimated all year, and now we're at lows, at yearly lows. I say it breaks below 100. I'd like it to anyway, but if we could break below 100, that's when we start picking up the GLD, which is the ETF tracking for gold itself. Or you could buy the GC, the gold future, or the bullion itself. So, you know, whatever flavor you like as far as the asset class, go right ahead and do so. You're not going to get hurt, okay? So that's going to be my trade going into next year. I'm watching commodities really, really closely, and I'm really liking the way this is setting up. Can this change? Absolutely. But I just want to let you know right now, start looking at it. And remember, guys, and most importantly for equities, watch the transports, watch the Russell. Spiders, you can see we did nothing here, guys. 1, 2, 3 full days, we did nothing. So we're just hovering above here. Looks like the bulls can't get out of its own way, and the bears can't sell this thing down. So what do? We do nothing until the market breaks, or at least tells us what to do. All right? All right, now let's take a look at diamonds. You can see same thing here. Nothing going on. Now, this is where we want to keep our analysis in check. We did break out of that ETF. Now we want to make sure, we want to see what happens here in the next couple of days, okay? So that's the next thing. Let's take a look at a Russell. Now the Russell here, again, trying to break out a little bit. To me, this is nothing more than a test of the 200 and fail. Every time it hit the 200, well, right about here, let's start from here. Here, fail, failed. Not even get close, failed. Hit it here, failed. Right to me, repetitive patterns tells me that this is going to go lower, okay? Now, again, unless there's some sort of a catalyst to push this up, other than, you know, light volume day up, that doesn't, to me, that doesn't count, okay? So just keep that in mind, guys. All right, and lastly is the Qs. Again, moving higher on selective few big cap stocks. Don't get caught up into the technology sector at the moment, okay? Although it does come into some seasonal strength, but I'm not seeing anything fantastic out there, okay? All right, guys, I hope this helps. Remember, watch the dollar with your commodities that you like to trade. And again, the caveat here, if we're going higher or lower, is going to be the Russell or the transports. Have a great day. Enjoy the long holiday. We'll have a brand new update on Monday. Take care, everybody.